Good evening, everybody. This is Sunday, January 16th. This is going to be the commodity review. We're doing a redo from Friday's video. We didn't have any sound attached to that. So I'm going to quickly run through corn, the euro currency, gold, and 30-year bond futures. I just want to show they all kind of demonstrated something a little bit different. So I just want to show how we use these levels. On the lower right-hand panel, I added an intraday panel, which we're going to be using with our equity analysis in a couple minutes. Let's take a look at corn. Corn's in the midst of a very strong bull market. The question often gets asked, how do you enter a strong bull market? How do you pick your spots? And the idea is, it's there's finesse between bottom picking a pullback and then buying a legitimate pullback. Here's a situation back in November where corn actually broke through for the first time in a long time. We actually broke through the downside. This was a really strong commodity sell-off, and we broke through around 552. This was a level that if you were, commodity bull and you wanted to pick your spots, this was not the month to do it. We did not have any follow through to the upside. If you're a bull there, that was a legitimate short signal to get short. And into the next month, we had a signal to the upside in December at the 592 level. But the really good risk reward trade in this corn trade was the January monthly levels, which we pulled down almost to the tick right here at 596 and a half. And we traded all the way up to the monthly high monthly volatility level, which is right around 657 and a half, and that's pretty much where we traded up to last week. So I just wanted to showcase that. We did not talk about that this week in the newsletter, but that is a example of how to use the monthly pullbacks on some of these trades. Let's pull up the euro. I'm going to pull up the euro futures this time. This was mentioned on Monday in the newsletter. It was actually Sunday evening, I guess. And we're going to maximize. This is the quarterly level. I mentioned that trends often end at their quarterly levels. By the way, we'll showcase both of these levels. Here's where the euro trend ended around the 142 level. Again, a very nice rally from 118. The idea here is that it failed here. This is not a level that we just know arbitrarily by saying, okay, this is where the level is going to end. It's an area that we want to pay attention to. If we watch the price action, we could not get a confirmation above that level. That was where, if you were a bull on the euro, this is where you wanted to get out. And now this trend that we've had where we've sold off down to the 128 level, 1400 pips. Again, if you were a bear and you were short this market, this was definitely an area that you wanted to cover your short, not necessarily an area to get long the euro. Um, Possibly we're getting close to an area where you'd want to reshort it, and we're going to use those monthly levels. And here in the euro, it's right around the 136 area. That would be the opportune place to resell the euro futures if you were still a bear. Let's pull up gold. Gold was also mentioned in the newsletter, and that was a sell signal that generated earlier this week on Monday. That was mentioned. We broke through immediately at the beginning of the month. The level in the futures was 1395. We traded back up to it and failed there and came in. I want to remind people that this is not a support level, so support does not become resistance. It's simply coincidental that we traded right up to that level and bounced back off of it. So I don't want anybody thinking that's an area that you want to reoffer the market out. If you missed it, it just happened to work in that area. We have a bias when a market breaks that level. We don't have an instantaneous sell signal. Let me show you the 30-year bond futures. Again, this is a trade that's been weak, month in, month out. And we've got ultimate target down here in the quarterly is 116.23. We did temporarily bounce off the monthly. Again, if you were short, this is probably as good of a level as any. We broke through it pretty much every month here. We broke through it. We broke through it up here in September. We traded through it in November and December, and now we failed to break through that monthly level. We could still break through it, and there's a good chance that we will either this month or possibly trade down again next month. But we'd be looking to cover there at that quarterly level. Thanks, guys. Next section will be the equity section.